Welcome back to Clear to Close REI. Today we're talking about one of the most powerful loan products available to real estate investors, the DSCR loan. DSCR stands for Debt Service Coverage Ratio. Sounds complicated? It's not. Let's break it down. First, let's talk about why this loan even exists. Imagine you're a real estate investor. Your rental properties are making money every single month, but on paper, your personal income looks complicated. Maybe you're self-employed. Maybe you write off a lot of expenses. You go to a bank, they pull your tax returns, they look at your personal income, and they say, "Sorry, you don't qualify," even though your properties are cash flowing. That's the problem DSCR loans solve. Traditional loans are based on you. DSCR loans are based on the property. The lender asks one simple question: does this property make enough rent to cover its own loan payment? That's it. No W-2, no tax returns, no pay stubs. Here's how they measure it. You take the monthly rent and divide it by the monthly loan payment. That payment includes principal, interest, taxes, and insurance. Lenders call that PITI. So the formula is monthly rent divided by PITI. Quick example. Rent is $2,000 a month. Monthly payment is $1,600. 2,000 divided by 1,600 equals 1.25. That's your DSCR. Above 1.0 means the rent covers the payment. You're cash flowing. At exactly 1.0 means you break even. Below 1.0 means the rent doesn't fully cover the payment. Most lenders want to see 1.0 or higher. So who is this loan built for? Real estate investors, self-employed investors, investors scaling a portfolio, investors who want a faster, simpler process. No employment history, no income verification. The property does the talking. And here's where it really shines. Because the loan is based on the property and not your personal finances, you can keep adding properties without hitting the walls you'd hit at a traditional bank. Investors use DSCR loans to go from 2 properties to 5 to 10. A few things to know going in. These loans come from private lenders, so rates are a bit higher than a bank. Most lenders want a credit score around 620 or better. Down payment is typically 20 to 25%. And the property must be an investment property, not your primary home. Works for single-family rentals, small multifamily, and short-term rentals. That's DSCR loans. Simple formula. No personal income required. Built for investors who want to scale. Next video, we're breaking down fix and flip loans, fast closings, construction financing, and exactly when to use them. If this helped you, subscribe. See you in the next one.